I am quickly going to run through income protection, what it is, why you should have it, and how to get your tax relief on it. Income protection is also known as salary protection or income continuance. It is an insurance you can put in place in the event of an illness or an injury and you are out of work. In an event where you cannot work, this policy will kick in and pay you up to 75% of your salary. And like a lot of insurance policies, the payout will depend on your level of cover. It is worth checking to see if you have this policy in place already. By looking at your payslip, you will see income protection listed or salary protection. You will see deduction from your wages. In my payslip reviews, I see a lot of clients that have this in place and they don't even realise it. The majority of public sector jobs will have this already in place, and sometimes you are given the option to be part of it. On the other hand, then in most of private sector jobs, this is not offered, and if you want this set up, you have to go about and set it up yourself. There are two main reasons somebody would set this up, and the first is, like I explained earlier, if you are out of work due to illness or injury, you will get a portion of your salary paid to you. And the second reason someone would set this up is because of the tax relief you can get on the payments you make. So you have income protection set up. How do you get your tax relief? There are two scenarios. The first is if you are somebody who gets it through your work. So for example, the majority of public sector jobs may have this in place. If you see income protection on your payslip, that means that you are getting your relief at source. You do not need to do anything on your revenue account. Then on the other hand, there is everybody else who has set this policy up separately to their employment, and you are paying privately by direct debit out of your bank every month. These individuals need to claim their tax relief through their My Account on revenue. So like I said, if you are somebody who can see it on their payslip being deducted every time they're paid, you do not need to do anything. Your tax relief is sorted. But for anyone who has set it up privately, I'm just going to go through exactly what you need to do. I'm going to take an example of somebody who applied for a policy in the year 2021 and they started paying into that monthly in 2021. So in that case, this person needs to go back for the last 2 years to claim their tax relief and get their tax back. They will need to do their income tax return for the year 2021 and include income continuance in that return. It's in section 4 of your income tax return. You will do the exact same thing for the year 2022. And then let's just say you started a policy in the year 2023. All you need to do is go into your My Account on revenue.ie, and in the PAYE services section, the blue section at the very top, you're going to click on Manage Your Tax 2023, and in there click on Add Credits. And in there, you're going to select on income continuance. You will need to upload some documentation of your policy. You will always get sent a cert that you have a policy in place. You just upload a copy of that, input what you are paying monthly, and Revenue will apply your tax relief to your current tax credits. So it'll be applied to the rest of this year and going forward as well. If you're somebody that's unsure if you've already claimed your relief or not, so obviously in the case of a privately set up policy, so if you look at your latest statement of liability for the last couple of years, this will be in your documents folder on your My Account. And if you see on page 2 income continuance listed, that means you have got your relief there. I hope this video helps you understand income continuance a little bit better, or income protection. And if you have any other questions, please pop them in the comments below.